Hey guys, good afternoon. It's Angelo, Christian Financial. Thank you so much for watching my podcast, Real Estate Insider. I've been doing this for over 5 years and happily shot over 700 videos, been in business for over 2 decades and helping tens of thousands of people all over America to get their mortgage loan funding. Today we're talking about a video about hard inquiries versus soft inquiries. What does it mean? What's the difference? And when you're getting a mortgage loan, if you get hard inquiries, people are always very concerned about someone to pull their credit, because if they have a hard inquiry, it can lower their credit score. And I'm very guilty of that too. I don't like when people pull my credit unless I need to get a loan for something. And you need to know the difference between a hard inquiry and a soft inquiry, because different type of loan programs that you're going to get, maybe like when you go to buy a house, they're going to have to do a hard inquiry on you. But maybe if you're applying for employment, or you're getting an auto insurance quote, they're going to do a soft inquiry and it never shows up on your credit. So it's important that you know the differences and when it can be good and when it can be bad, because sometimes some lenders will use a soft inquiry model, but it has its pros, it has its cons, and you need to know what those are when you're trying to get a home loan. So basically, we always use the whiteboard for education. We're really big about teaching people, empowering them, so that way they're aware. The first thing you need to know is that what is a hard inquiry. So basically what that means is that when you're applying for, a car loan, a mortgage loan, a credit card, you're giving the lender the right to pull your credit report, and there's a section on the credit report called inquiries, okay? Now, you're allowed to have inquiries, there's nothing wrong with that, but what ends up happening is that when you apply for a mortgage, for example, you're given a certain time frame, a window to shop for a home loan. In this example, the Fair Credit Reporting Act, they allow 30 days for you to shop for your mortgage loan. So let's say that you apply with ABC Mortgage, on November 1st, you have until December 1st to finish up all your shopping, have all your credit ran. If you go beyond that window and you have more inquiries that pile up, you will realize a drop in your credit score. And the reason why is, and that shows here that, and I write this down here, too many inquiries will drop your credit score. And I put right there big time, because if you have too many inquiries, then it looks to a lender or to an underwriter or concern that you're not able to obtain credit. Because in that 30-day window, you should have gotten your shopping done and maybe talk to a couple different lenders, 2 or 3 lenders or whatever. But if you have, I've seen some people's credit report, and I kid you not, their inquiries are this big. And when you see that, that makes it, you think that that person has just gone crazy and AWOL and they can't get a loan. And you'll see like their credit score will tank like 100 points. It'll just go down big time. And that's not a good thing. You don't want to have that happen to you, because if that is, you could have a 700 credit score and then it could go down to a 600 credit score, and now you won't be able to get approved for the loan, right? And there are softwares, there are tools that can go in there to help you delete the inquiries, but you got to be really careful to make sure that it's legitimate software, that it's not something that is just some bunk or fake, type of software to help you. So with soft inquiries, that is something that's emerging right now a lot in the market. And again, you see that for employment, you see that for like insurance, different times. But for a mortgage, you're starting to see mortgage lenders now try to evolve into using the soft inquiry model. And the great thing about it is that, it doesn't show up as an inquiry on your credit. And I put that right here. So it's not going to affect your credit score, and you can have as many soft inquiries as you want. Now, the thing is, though, is that it's not really grounds for an approval letter. A lender cannot legally or technically give you an approval letter if they've done a soft inquiry check on you, because the soft inquiry may not release all the pertinent data as far as public record, liabilities, assets, debts, different things that you have on your credit report that a true full credit report is going to have. A tri-merge credit report is a 3-bureau credit report from Equifax, TransUnion, Experian, and has all the information about the addresses you live, any names you've had, alias names, your employer, your debt ratio. And a soft inquiry credit model doesn't show all that information. And so the thing is that you have to be careful is that if you have applied for a mortgage loan and they've done a soft inquiry, that doesn't give them grounds to issue an approval, because it doesn't release all the information and it may not reflect your true accurate credit score. So you might start off with a soft inquiry credit, but then you have to upgrade to a full inquiry if you're trying to get a mortgage loan, especially if you're trying to do a purchase transaction and you're going to go under contract, because that's a very serious thing, and you got to make sure that the lender has properly and accurately assessed your credit for approval and qualification, because you don't want to get denied because you start off with a soft inquiry and now you're not eligible, because when they did the full report, it showed a lower credit score, it showed more debt. So the soft inquiry model does have its pros and also has limitations, but know if you're going to get a mortgage loan or a car loan, they're going to have to do a hard inquiry on you. Just remember, you have that 30-day window to get all your inquiries done. After that, you need to stop your shopping, because if you keep shopping, letting other lenders pull your credit after that, your score will go down. You don't want to have that happen if you're trying to get a home loan or any type of, borrow money for a car loan or whatever. So if we can help you with any type of mortgage lending, we specialize in FHA, VA, USDA, jumbo. We'd love to service you in any way that we can. You can call or text our office at 832-431-6331. You can also click on the link below to get signed up to actually get pre-approved. We'd love to hear from you. Remember, we lend nationwide, commercial and residential. The only state we don't lend primary residence is in Maryland, but any other program we can help you with, please reach out to us. We're here for you to service you in any way that we can. And please check out my next video, everybody. Thank you.